welcome. Good evening, viewers. You're watching Ask Profit only on NDTV Profit, and I'm your host, Malika Mishra.
And I'm your host, Himakshi Bahugnan. Together, we'll be taking up all your stock-related queries. So WhatsApp us or call us directly. Both the numbers are flashing on your screens right now, viewers. And on the show today, we are joined by Lancelot Dikuna, CIO ValueX Wealth Connect LLP on the fundamentals, and Gaurav Sharma, Head of Research, Equity, Commodity and Currency, Globe Capital on the technicals. Welcome to the show, gentlemen.
Thank you and good evening.
Good evening. Now, let's start with the show with the first query, which is written to us from Yogesh from Bengaluru, saying that he is holding 12,333 shares of Jio Financials at 280 a piece, and he's looking for a long-term view on it. So, Mr. Dikuna, the stock is trading around 221, reflecting recent volatility and a decline of about, over 26% in 2025 so far. So, what do you have to say on the fundamental aspect?
So I think from a fundamental perspective, the stock is actually building in a lot of anticipation of profits or revenues, because it actually is in the process of trying to put together various pieces of a financial services business. So one joint venture with BlackRock is going to come up for the asset management space. It is working on loans with other partners. But since these are all in the pipeline and they all need to be implemented before you can start to see profits, I think there's a lot of anticipation of future profits that's getting priced in, and that is making it an expensive option. And so unless one is wanting to take the volatility that may come with some negative disappointments or postponements, one could probably be away from the stock, or maybe just hold on to your current position if you're losing money on it, because it could be a long-term play, but it's definitely going to take a while.
All right, a long-term play and definitely going to take a while is what Mr. Dikuna is suggesting. And also, Mr. Dikuna, he is sitting on a significant loss of over 7 lakh rupees. So do you still suggest him holding, or should he be booking his losses?
I think when you look at it from a perspective of whether you should book losses or not, it is based on the fact that if you exit now, can you redeploy the capital, which will help you recover that loss, faster than holding on to Jio Financials, right? So Jio Financials basically is a company which is highly valued at this point in time. There are more attractive options. Like, for example, there's a Bajaj Housing Finance, which is trading at a reasonable multiple. There is good growth. It already has a relatively strong balance sheet, and so there is a faster possibility of recovery of that loss if one looks at exiting and then and moving it into something like Bajaj Finance. So that Bajaj Housing Finance, so something like that will give you let's say a higher margin of safety in terms of where markets can go bad. So my advice would be that if you are not wanting to take the high risk of even a further decline, one can look at moving out on this, booking a loss, and putting it into a stronger, fundamentally strong company that could give you faster returns or better returns, or returns with more surety of profits.
Understood. And in fact, Mr. Lancelot, our next query, Siju has written to us from Qatar. He holds 1,000 shares of Bajaj Finance at 141 rupees a piece. And you rightly mentioned that Bajaj Finance's, balance sheets Bajaj Housing Finance's balance sheets look healthy. In fact, in its Q4 business update as well, the Bajaj Group company posted a rise in disbursements, and assets under management also rose. What would you suggest Siju to do with his 1,000 shares? Because the stock has been trading around 118 rupees a piece, which is lesser than his buying price.
So I think if he's a long-term investor, he can look at, it is dipped by almost, he bought it at 140. So basically around, 12% lower it is trading at. So he can look at maybe adding some additional funds to this stock, because over a period of time, especially in the arena of falling interest rates, housing finance companies should do much better, as a sector. And within that, Bajaj Housing Finance is one of the more solid companies looking at the differentiated segments in terms of smaller ticket sizes, in tier two towns, and also they have the backing of the past track record of many of the borrowers from Bajaj Finance per se, which would give them the additional comfort in terms of underwriting the risk. So one should look at it that it's worthwhile maybe accumulating the stock at lows, and you keep adding to your portfolio. Over the next year or so, you should see much better returns from this stock.
Okay, very well understood that. And Gaurav Sharma, I would want to know from you, because Lancelot just mentioned that it would be a good idea to accumulate shares of Bajaj Housing Finance at these levels. Could you give us a target price for accumulating more of these shares?
Yes, I am also of a similar view that these are good, attractive levels to start accumulating this stock. Bottom formation is quite much visible here. Considering the recent turmoil, this stock hasn't reacted to the recent sell-off that we have seen across the globe, including the Indian equity markets. So I firmly believe that from here, a limited downside is there. I advise the viewer to maintain a stop below 105. And if he has some spare capital, he can even consider averaging out at this point and look for targets close to 140, 145 in the coming weeks.
All right. Thanks for that view. Now let's go across to another WhatsApp query written to us from Hyderabad. Ravi is saying that he's holding 49 shares of LIC Housing Finance at 565 a piece, and whether he should hold or sell, he's looking for a 1-year horizon. So Mr. Dikuna, currently it's also hovering around the similar levels. It's trading at 556, and if we talk about the stock performance today, so it was down over 1% in trade. But talking about the housing finance the space, so LIC, do you see it as a strong candidate there?
Yes, I think LIC is also a strong candidate in this space. And if you look at its probable valuations, it's not really that expensive. It's trading at about 1 time price to book, which is a reasonably good level to invest in a company like LIC Housing Finance. You will see growth in the housing finance sector because LIC does, again, mainly focuses on the salaried class and people who are, let's say, employed. So the risk is a lot lower. And now you are seeing a lot of traction as far as the real estate sector is concerned, especially from first-time home buyers. And these are typically the target segment for LIC Housing Finance. So I would think that this is really a good time to start accumulating, even though it is lower than the cost price marginally. If one is looking at it from a 2 to 3 year horizon, definitely what looks like you can add and hold on to the stock.
Okay, got it. And viewers, just a little digression from the show. We're at the moment knowing that Ola Electric tells Maharashtra government it's in the process of applying for trade certificates for its stores in the state. And my colleague Tushar is currently joining us on the phone line. Hi Tushar, thank you so much for bringing us this update. Firstly, what are you currently picking up from this clarification that has come from Ola Electric, and how did Ola Electric exactly respond to these allegations of operating so many stores under single trade certificate by the Maharashtra government?
Hi, good evening. So, Ola Electric actually has responded to a Maharashtra government letter that was sent to it on March 31st. Now, this letter was sent out on the 5th of April, saying that Ola Electric is now in the process of applying for trade certificates for its stores in the state. Now, we have to remember that Ola Electric has about 488 sales and service touchpoints in Maharashtra. Now, some of these, or actually a bulk of these, were operating without trade certificates, and that's what the explanation was sought from the company. The Maharashtra government sought the explanation from the company. Now, what Ola Electric is saying that they are now actually transitioning from a warehousing model to a store-based model, which is why the delay in applying for trade certificates. But we have to remember that India's motor vehicle rules say that you cannot open a dealership without the necessary licenses and approvals in place. Before, you have to procure those trade certificates first, and then you can open a particular store. So Ola Electric chose to open the stores first, and then now, after a notice was sent to it by the Maharashtra government, now it is going ahead and getting trade certificates. So it's little the chicken and egg situation, I would say that, but you're just essentially going now and applying for it. But again, evolving situation. You have to see how the Maharashtra government treats this response from Ola Electric.
Okay, understood. So just to summarize what Tushar just said us, that Ola Electric has responded to Maharashtra government's clarification that it needed on trade certificates, and Ola Electric has told that it is in the process of getting these trade certificates for its stores in the state. It currently has around 488 sales and service centers in Maharashtra as per its website. We will see what the implications are on the stock as well as the future of the company. But moving on, thank you so much for those updates, Tushar. Moving on with the show, Pramod from Bengaluru has 50 shares of Triveni Turbine at 760 rupees a piece, and he's asking whether he should hold or sell his shares of Triveni Turbine. Gaurav, I'd like to come to you on this one. How do you see the charts of Triveni Turbine, and is it the right time to sell, or should he continue holding?
Yes, Triveni Turbine has been, a pick which generally is pretty much of a little volatile nature. As of now, what we are seeing is that some bit of profit taking is visible. That started from around 850 odd levels. Currently, the share is quoting at 475. So these are, yes, attractive levels. I advise the viewer to hold on to his position, keeping a stop below 450 and look for target close to 650 and even 700 in the immediate near term.
All right. Thanks for that view. With that, we are joined by a caller from Gujarat. Hi, Dharmesh. Good evening.
Good evening, ma'am.
Yes. How can we help you on the show today?
Ma'am, actually, I have purchased share of Tejas Network.
Okay.
At the average price of 918.
Right.
I hold 20 shares.
Okay.
And I want to know what is the future prospect of the company.
Right. And when did you purchase these shares, Tejas? Dharmesh?
Recently, I bought it recently 2 or 3 months.
Okay. In 2 or 3 months. So it's a very recent purchase. Are you looking for a long-term view on the counter?
Yeah, maybe 2 or 3 years.
2 or 3 years. All right. So, Mr. Dikuna, currently the stock is trading at 808, which is pretty below what levels Dharmesh bought these shares, and was down in trade also over 1%. So, are you optimistic on Tejas Network for the next 2 to 3 years? Is it advisable for him to hold this company?
One has to look at the applications and the what the business of the company is. So Tejas Networks is into the telecom technology space, and they are trying to bring in power the next generation networks, and hence that as the network has to grow, the business of this company will grow. The only issue is that the pricing of this company at the moment, valuations are sort of factoring in a huge growth potential. Whereas a lot of times, because there are only 2 or 3 major customers in the space, which is basically Bharti Airtel, Reliance Jio, and Vodafone, a lot of these companies, the profit margins can be under pressure based on the since they have 3 customers, and the customers could determine what kind of pricing they can bear. So over a longer term, it's very difficult for them to generate above normal profit margins. And that could bring the valuations of this company down. So I think even at the current price, a lot of the negatives and even some of the positives are being factored into the stock. So one should wait really for a while, and then really look at what is the margins and what kind of growth you can see, and then only take a call.
Okay. So it's a cautious approach that one must have towards Tejas Network at this given point of time. Rohit is calling us from Karnataka right now. Hi Rohit, good evening.
Hi, good evening everyone.
Good evening. Please ask your question. Yes.
Yeah. So I have 2,296 shares of Sagility India at average price of 43.34. So I want to know the long-term view on this.
Okay, and when did you purchase these 2,996 shares, Rohit?
So post IPO, after the first results that they have got, I started buying it until now. I have bought, in the last 6 months, basically.
Okay, understood. And you want to know, like, what's your time horizon on Sagility?
So more than a year.
More than a year. So what would your prime question to our experts be today?
So I want to know the long-term view, since the export of this company is 100% to US.
Correct.
And because of that, currently the stock is falling. So
yes.
I am in ambiguity on, because I had clear vision on what to do with the stock, but because of this tariff, now I am feeling like I'm stuck in this.
Certainly, I understand that. Lancelot, I think you'd be the best person to give the advice here currently to Rohit. He holds 2,996 shares of Sagility at 43 rupees a piece. The stock is now trading around 38 and has been falling consistently. And Rohit seems to be in a tussle because he bought them with a clear mindset. Now that tariffs are into place and Sagility has full exposure to the US, what should Rohit do with Sagility at the moment?
Right. So, if you look at Sagility's business, it's basically providing technology-based solutions for healthcare, health insurance companies, and third-party administrators for hospitals, etc. So this particular administration job will be required, whether there are tariffs or no tariffs. So in that sense, I do not think that their business will get reduced unless there is a option that they have to maybe increase their cost by onshoring a lot of their activities instead of treating it as an offshore center. So if that happens, then the profitability can get impacted. But at the moment, even at this current price, it is trading at almost 35 times its earnings. And what could happen is that because of the let's say because of the situation in the economy in the US, a couple of US companies, or they could defer their plans for expansion or for new providers or for increased revenue to the providers, and that could impact Sagility's growth trajectory. Since it's already trading at a very high multiple, I think one should wait till the multiple corrects to a reasonable level, which is between 14 or 15 times earnings, and then one can look at maybe adding. Otherwise, you just have to decide on whenever if the price does go up, it may be worthwhile exiting, and thereafter look to accumulate if it comes down to 14, 15 times earnings.
Right. Thanks for that view, Mr. Lancelot. Now, let's go across to a caller joining us from Bengaluru. Hi, Suhas. Good evening.
Hi, good evening.
Yes.
Thanks for taking my question. I am one of your regular watcher of your show, and as well as the morning 11 a.m. show as well.
Right. Thank you so much. Thank you so much for that support. And please go ahead with your query.
Yeah, I hold 5 stocks of Asian Paints at the rate 2,229.
Mm-hmm.
I would like to know 1 year perspective.
All right.
Initially, I had bought around 3,000 range, and I had booked out around 3,200.
Right.
Again, I re-entered again 2,229.
Okay.
I would like to know perspective of 1 year.
All right, I'll get your query answered. So, Lancelot, currently the stock is trading at 2,411. So, how do margins look going forward, especially with crude price movement?
So, while crude price movement has a little bit of impact on the raw materials for Asian Paints, in reality, there is a lot of their cost doesn't come only from crude-based, let's say, constituents of the product. But I think the bigger problem facing Asian Paints, or the bigger challenge facing Asian Paints, is the entry of Birla and the other large players in the paint segment, and they are lowering prices and offering higher quality products, which is actually forcing Asian Paints to also try to keep the margins low because they do not want to lose market share. So from that perspective, in the next 12 months, you might see this competitive intensity increase, and that could lead to a little falling margins. The other negative is for the industry per se. Over the last 12 months, the industry itself has not grown. So the entire paint industry has grown by only 6%. Now, if this continues, then even Asian Paints is going to be impacted because of revenue growth. So when one is looking at it from a year's perspective, I think things are going to be a little difficult. And, one cannot expect huge upside unless there's a significant change in the demand for paints, and maybe the competitive intensity between the other players also drops. Then you could see some kind of upside from here. Otherwise, one has to be, if you're really long term and you're looking at 3 to 5 years, maybe and willing to hold it. If you hold the stock patiently, yes, Asian Paints is changing from a pure paint company into a completely interior decoration company, which is a huge business and has much higher margins. But that entire change could take another 3 to 4 years till that becomes a significant portion of the business. So if you're looking for a 5-year horizon, one can look at holding. At 1 year, things are going to be looking a little bit tough.
Right, thanks for that view. So, viewers, you must have listened to Mr. Lancelot, suggesting that if you're patient enough for holding Asian Paints for like 4 to 5 years, then you can keep holding it. But for 1 year, it's a bit tough. And Gaurav, if we talk about the charts for the short term, so any indicator showing trend reversal or continuation there?
Yes. For the short term, things look completely different for Asian Paints. Good accumulation is pretty much visible at the current levels. The volume is also increasing. That all goes to show that some bit of buying interest is what we have seen. It has risen from 2100, 2150 odd levels to currently floating just above 2400 mark. I see it heading towards levels close to 2550 odd levels, where it could face some resistance from its 200-day exponential moving average. Once that is taken out, 27 will also be on cards.
Okay, understood. So mixed view on Asian Paints there. And now we will take up Sukumar's WhatsApp query. He's written to us from Karnataka. He holds 60 shares of Varun Beverages at 650 rupees a piece, and he is seeking a long-term advice on Varun Beverages. The stock is now trading around 540, was almost flat in trade today, and we've heard that foreign institutional investors have been active buyers in Varun Beverages, especially after dealers said the perceived threat from Campa Cola, its competitor, has softened, with expectations of limited impact on the company's market share. Mr. Lancelot, I will take your view on Varun Beverages as well, because it's been talked about as a company that is quite vulnerable to competition in its own space. How do you perceive the company's performance in the long term, and what should our viewer do with his stocks?
I think, competition in this beverage space is really difficult for new entrants to come in. And I think in that sense, Varun Beverages is relatively stands on a stronger footing. So I don't really see too much of a problem with the current competition, because they will be able to continue to gain, market share. They have the product range, they have the distribution network already in place. And so it takes a long while for a competitor to build that strength. In the meanwhile, they will keep expanding their book. I think what is of a little bit more concern is recently Varun Beverages has actually expanded overseas, both in Africa as well as in Eastern Europe. Now they have made an investment in that region by taking over the existing franchisees over there, and then they have to build it out. Now, if you do see the impact of let's say global slowdown hitting some of these regions, then you could see it could take longer for these operations to break even and actually make money and start contributing to the bottom line. So that is something that one needs to wait and see how the next 1 or 2 quarters pan out. Then one can get a much better option, much better view of whether one should accumulate Varun Beverages at that point in time for the longer term.
So, Mr. Gaurav, while Lancelot does reckon the fact that global expansion for Varun Beverages and perhaps a relatively stronger footing for the company could bode well, but how do you see the stock perform? Because it has dropped close to 50% from its 52-week high. when do you see a trend reversal just with regards to its stock price?
The stock looks good to us. I want to make a disclosure here. We have been recommending this stock from in the recent past itself. So here is a disclaimer for that. We are somewhat bullish on this stock. I see it heading towards 600, 650 levels in the near term. And this is what we can see. There is a minor hurdle somewhat placed close to 560 odd levels. Once that is surpassed, it will quickly head towards the set targets of 650.
All right. Thanks for that view. With that, let's go across to a caller joining us from Bengaluru. Hi, Lakshman. Good evening.
Hello, good evening.
Yes, Lakshman. Please go ahead with your query.
Madam, I have this Welspun leaving 1000 shares at 128
Okay.
for short term. Whether it is good to hold or what?
Okay. And when did you buy these shares of Welspun Corporation? Living.
Not Welspun leaving.
Living. Yes. My bad. Yes, tell me.
2 days this week only, madam.
Okay. So you're looking for a short-term view on it. For how long still are you planning to hold it?
1 year.
Okay. Gaurav, I'd come to you on this one. Currently it's trading at 113. He bought it at 123. A very sharp fall, the stock witnessed after 3rd of April. So how is Welspun Living, positioned amid global infrastructure and pipeline demand?
See, as far as its recent performance is concerned, yes, it has slipped from 140 odd levels to 113 currently trading at. Things do not look good at current levels as well. I see it falling further. 105 should be a closing stop loss that I would advise the viewer to have, because if that level is taken out, it will fall further to even 90, and even lower levels are also possible.
Okay, so lower levels are also possible. With that, viewers will have to slip into a short break, but please keep sending in your queries on WhatsApp and call in right away. We'll be right back for Ask Profit. Stay tuned to NDTV Profit.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
Those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
We want to be the de facto platform for startups to accept payments. Out of 120 unicorns that India has, Razorpay powers almost 105 of them.
Then there is delivery. This stock has also been buzzing in trade. Dealers are indicating that there's a potential corporate development announcement, some acquisition announcement that the company could do when it comes to e-commerce express delivery space. So keep an eye out for delivery as well.
Welcome back, viewers. You're watching Ask Profit on NDTV Profit, and I'm your host Himakshi Bahugna. Along with me is my co-host Malika Mishra, and together we'll be taking up all your stock related queries on the show. And we are joined by Lancelot D'Cunha on the fundamentals and Gaurav Sharma on the technicals. So, viewers, this is your chance to get all your queries, stock-related queries answered. So please don't miss it. Pick up your phones and call us right away. The numbers are flashing on your screens right now. With that, we have a caller joining us from Kolkata. Hi, Vinay. Good evening.
Hi, I'm Vinay speaking.
Yes, please go ahead with your query, Vinay.
I have about 950 shares of Ola Electric.
Okay.
I have bought them at average price of 85.
Right.
I was recommended at 115 by Motilal Oswal. And after which the prices have been falling. So at every major fall, I used to accumulate more. So my average is only 85, but still I think the price is right now around 49 or 50, isn't it?
Yeah.
Okay, so do you recommend I hold on to the shares for long term, maybe 3 to 4 years?
And firstly, for how long when you initially bought Ola Electric shares, so what did you have in mind? Were you planning to hold this company for long term or short term?
Yes, long term, 4 to 5 years.
4 to 5 years. All right, Vinay, I'll get your query answered. And, viewers, just, few minutes back, we actually broke a story related to Ola Electric that it will be applying for trade certificates in the States, and it's an NDTV Profit exclusive. So, Mr. Lancelot, it'll be interesting to see how Ola Electric will be, impacted. The stock will be impacted on Friday, in the trade session. But talking about the fundamentals of the company, this company has always been on the news, and it's a pretty volatile stock there. So, still, do you have any views on the counter?
Yes, I think, if you look at it from a fundamental basis, a lot of, let's say, a lot of interest was there in the company because they became one of the major players in the electric two-wheeler space. Now, if you look at recently, the company has got into some trouble because they announced the February numbers of sales, which were much higher than the actual registrations. And then I think they gave a clarification saying that they had accepted, they included the bookings of the motorcycles, which they haven't yet delivered or not even manufactured. But they've included that bookings of the motorcycles in the sales numbers. Then you have today what the story that you all broke out that they don't have a trade registration for almost 400 and odd outlets which they have been doing. There have been issues regarding complaints with the dealers, and there are service issues which has been going. Now all these need to get resolved and resolved in a hurry. So that the company can sustain or even maintain its business. Anything that is negative in this space in terms of the business outlook and the business itself will be detrimental to the growth as well as the branding of the company. So I think from that perspective, when one is looking at investing into Ola at this time, the risk is very heightened. The risk-reward ratio is very much in favor of much higher risk, and there is very little, let's say, margin of safety because Ola at this point is not even making, huge profits. It still requires to raise capital to sustain its operations. So given that background, you can't think of it as a solid investment at this point in time. It's more like you're buying into a hope that there is going to be a great two-wheeler revolution. And mind you, now a lot of the existing players in two-wheeler space, whether it is Honda, whether it is Suzuki, whether it is TVS, Bajaj, they've also started launching their own two-wheeler electric vehicles, and this is only going to increase the competitive intensity in the space. So, given that valuations are high, it's not really generating any profits. They would need to raise resources in order to sustain the burn rate. I don't think at this point in time, Ola can be considered as a good, solid investment. So if you've already invested in it and you're stuck with it, maybe you can look at technically if there's a bounce, you exit and, book losses at point in time, and then maybe If it does come down, you could accumulate and then again, trade in the stock for a short term to help you. But from a long term perspective, unless these issues are resolved and you see clear cut growth with good corporate governance, then only one should look at a company like Ola.
Right. Mr. Dikuna, thanks for that view, and also rightly said that that only Gaurav will be able to help us. That if looking at the charts, do you see any bounce back there? Because our viewer is sitting on a loss. So are you seeing any sort of recovery there? Gaurav, you're, if you can unmute.
Yeah. Am I audible now?
Yeah, you're audible now. Please go ahead.
I was saying that the charts do not look attractive at all. The stock has been hitting lower lows. The viewer has already purchased it at a much higher price. I guess it is 115 is the buying price where he first initiated. Then he kept averaging it, so average price comes out to be 80, 82 or something. So these are, he is on a decent loss, but I think he has to take it with a pinch of salt now here. It is better to get rid of it. I do not see any meaningful recovery coming in this space as of now. Mr. Dikuna rightly mentioned, now when Honda, Bajaj, TVS, to the likes of these kind of Ather for that matter, they are also coming up with their, competition will be very tough and it will be very difficult for Ola to even maintain its share. So it is better to shift from this space and look at the conventional two-wheeler space for that matter.
Okay, understood. Clear takeaways from Ola Electric right there. Let's now talk to M.R. Reddy. He's calling us from Andhra Pradesh. Hello and welcome back, sir. What's your question today?
Good evening, madam.
Good evening.
Regarding Suzlon Energy.
Okay.
I purchased 8,000 shares at the rate of 54 rupees.
Okay. When did you buy them? When did you buy them, sir?
15 days back.
15 days back. Okay.
Can I add more shares or can I continue?
Yes, continue. Okay. Got it. Mr. Lancelot, I will take your view on this one. Mr. Reddy, in just the last 15 days, has suffered a loss of 30,000 merely through investing 8,000 shares at 55 rupees a piece. The stock is now around 4 rupees less, trading around 51 levels. Plus, some really, strange things about Suzlon Energy is the fact that its wholly owned subsidiary Suzlon Global Services received a penalty order worth 7.47 lakh rupees alleging non-payment of customs duty recently. Plus, it also reported a cancellation of 2 big orders. Now, how the quarter has turned out and panned out for the company is yet to be known in its quarterly results. But how do you look at the stock and the company as well? What are the future prospects of Suzlon Energy going forward?
Suzlon presently is trading at about 61 times its trailing earnings. And, with all the challenges that it's facing, it is very difficult to see whether, this, past earnings can be sustained. You might even see a decline in earnings. And with such a high multiple, when it trades at such a high multiple, your margin of safety is practically, zero. So one has to be very careful when investing in such a company from the long-term perspective, unless you can see visibility on the order book, on the profit margins, and the sustainability of their operations. I think it's, you'll be buying into a very expensive proposition. And in case there's a negative surprise, even for a quarter or two, or like you say, this big demand comes up and it becomes payable, then you could see, the stock correct very severely on the downside. So I think from a risk return basis, it's not really a great opportunity. And there are many other opportunities in the market. So many good companies have dropped in terms of multiples, and where the margin of safety is much stronger. So one should definitely look at looking at exiting and look at other stronger companies in similar spaces, which can give you returns with much higher margin of safety.
Okay, got it. So, Mr. Gaurav, since Lancelot has mentioned that he views further, he estimates further downside for Suzlon Energy given the challenging environment for the company. Plus, margin of safety is extremely narrow for the company as well. And since our viewer currently holds 8,000 shares, which is a big, large portfolio of shares for one company itself, could you give us a stop loss and as well as a right entry point for our viewer to exit these shares? And what should the exit strategy exactly be? Should he sell them altogether collectively, or should it, go into phases?
First of all, it will be very important to look at this quarterly numbers. That is something I will be keenly looking at, because otherwise in its previous rally, we have been continuously recommending Suzlon to our clients. And as of now, since it is available at quite a decent corrective level from 85, it made a high. Now it is available somewhat around 50 odd levels. So what I see is somewhat more 10-15 odd % of decline is possible, and the stop should be maintained somewhere close to 40 odd levels. And I would suggest the viewer to hold, if he is having a short-term view, consider even adding some more positions at dip and look for targets close to 60 and beyond after that.
Right. Thanks for that view on Suzlon Energy. Now, Venkateshwar Rao is joining us on the phone line from Bengaluru. Hi, Venkateshwar.
Good evening, madam.
Good evening. How can we help you on the show today?
Madam, I have got around 50 shares of India Glycol, madam.
Okay.
Purchased around 3 months back at a level of 1,100 rupees each.
Okay.
Now it is hovering around 1,200 like that.
Yes, yes.
Due to this tariff war, so due to America's this one, whether there will be any effect on that stock.
Okay.
Shall I can hold this for a long term, or shall I accumulate this, or shall I come back from this stock, madam? I wanted to know from the experts.
All right, all right. So, Mr. Dikuna, I'd like to direct this question to you, since he's looking for a long-term view on India Glycols. Currently, the stock is trading at 1,221 and was also up in trade today over 1%. So, how is India Glycols positioned in the specialty chemicals and bio-based chemical space? And, these US tariffs, Trump tariffs. So, is there any sort of impact on this particular stock?
When you look at India Glycols and you look at the chemical space, there definitely is going to be an impact on this space, because the tariffs is one part of it, but you could see maybe even the prices dropping if the demand falls. So the global prices could even fall, and that could result in even more difficult situation for the company. So given that the valuations are still a little bit expensive, considering that it's a commodity based play, and one should always invest in commodities when they are at the bottom of the cycle, you could see that the cycle can be weakening, and you are seeing a situation of overstocking or destocking in the global market that will take place, especially in the short term, because many people, to avoid the tariffs, would have placed orders much in advance of the of the deadlines, so that they don't have they would get things before the tariffs kick in. Now that could lead to a 2-3 quarter slowdown in terms of sales or deliveries going forward. And when you look at the valuation of the company, since it's expensive, one should probably stay away from the company at this point in time till there is more clarity on the earnings sustainability going forward.
Okay, got it. And now we have Venkat. He's calling us from Tirupati. Hi, Venkat. Good evening.
Good evening, ma'am.
Please ask your question, Venkat.
Madam, I have 27 shares of Sai Life Sciences.
Okay.
Which was allotted in IPO.
Mm-hmm.
So, due to the Trump tariffs, it is affected, I think. It has fallen down. Should I add some more, or should I wait or exit?
Okay, understood. I got your question. And could you once again tell us your buying price, please?
Yeah, it was allotted at 549 per share.
549 rupees per share. Okay, understood.
So I can hold it for at least 2, 3, 4 years like that.
Okay.
So how it will be the future?
Got your question, Venkat. Mr. Lancelot, I'll take this one to you first. Venkat currently holds 27 shares of Sai Life Sciences at 549 rupees a piece. So now the stock is trading around 639, around 90 rupees more than his buying price. He's asking, number one, the kind of pain that we're seeing the stock go through, is it because of Trump's tariffs? And my question, follow-up question to you would be, does the high valuation of this pharmaceutical company, especially as compared to its peers, give you any concerns regarding its upside projection?
So Malika, I haven't really studied Sai Life Sciences, so I really can't give a valuation perspective of the stock. So maybe if there's enough trading data, Gaurav could give you a technical view.
Not an issue, but I would still grab this opportunity and try to know your view on pharmaceuticals, since Trump's tariffs are looming large on the space. So if you could give us your view, and then I'll go to Gaurav Sharma for Sai Life Sciences as well.
Yeah, so I think if you look at it from let's say a pharmaceutical industry perspective, at the moment there has been some kind of relief being, touted for the pharma space, because they would need, generic pharma as well as raw materials for various products, and that do not want to hit the healthcare industry in the US at this point in time. But, tariffs can be on the cards as well for these products, and that could definitely have a adverse impact on on the businesses of companies who are supplying these chemicals or supplying these generic drugs to the US. So I would think that the risk is a lot higher, considering that many of the companies are not really trading at very low valuations. So one should stay away from the space till things settle down. Maybe if you get you can look for companies that are purely domestic focused, and only look at companies that have the US as their base if something happens on the tariff space.
Thank you so much. I appreciate that view. And quickly, Gaurav, if you could give us your technical perspective on Sai Life Sciences as well, because I mentioned earlier, and this was pointed out by Lancelot as well, that because it is trading at a high valuation, relatively high valuation, do you see there's limited room to go here on? And therefore, would you recommend our viewer to buy more units of Sai Life Sciences at this current time?
Malika, it's a new listing. The data is quite less to analyze it on the basis of charts, and we haven't also started a coverage on it, so we won't be able to provide a precise view on it.
Right, not an issue. Now let's go across to a caller joining us from Bengaluru. Hi, Vasudev. Good evening. Vasudev, am I audible? Vasudev, I would request you to please turn down the volume of your television, and if you could hear me.
Hello?
Yes, please go ahead with your query.
Hello?
Yes, Vasudev, we can hear you.
Hello?
Please. I think there is some issue on the phone line, but we have Vasudev's query with us. He's holding 80 shares of Arvind Fashions at 390 a piece, and he's asking whether he should hold or sell the counter. He hasn't mentioned the time horizon, so I'd like to take both the fundamental and technical view on it. Firstly, coming to you, Mr. Lancelot, how was Arvind Fashions positioned in the premium and casual wear segments, and how are the margins holding up amid changing consumer demand and cost pressures?
So Himakshi, if you look at Arvind's Fashions, a lot of its business, while it also has a lot of domestic business, a lot of the business also comes from, supply to overseas markets as well. So in such a situation, there will be a lot of pressure because once the tariffs kick in, you will see it difficult for exports to be sustained. And I think the domestic market where the major other part of the businesses of the company, we have seen a slowdown in the space from the domestic side, because you've seen consumer demand actually, ease up both in the rural as well as in urban India. And while there is a hope that this would improve going forward, till such time you see actual demand creeping in, or growth in demand creeping in, one should probably stay away, because valuations are a little on the higher space.
Okay, thanks for that view, Mr. Lansard. And also on the technical front, Gaurav, is Arvind Fashions showing strength on the charts post recent consolidation?
Yes, rightly said. It has been consolidating from past couple of weeks, and that consolidation is coming in near its supports. So 360 is the support level where which the stock needs to hold if meaningful bounce back has to come. A slip below the same would again bring back the bears into action, and much lower levels 350 and even 300 is possible. So all I would suggest the viewer is maintain a closing stop below 360 and hold on to your position. The stock will start getting into the greener trajectory once it is able to surpass 425 odd levels.
Okay, and let's now talk to Krishnan from Bengaluru quickly. Hi Krishnan, good evening.
Good evening. Today I just want to ask about HAL.
Okay.
Okay, I have 42 shares. I got it for 2093.
Okay.
And I just want to know the technicals, and I can hold for another 2 years, but I just want to know the how
Understood.
it's going to.
Got it. How is it going to perform in the long term? Got it. Lancelot, Krishnan currently holds 42 shares of HAL at 2,093 a piece. The stock is now trading around 4,040. It has doubled, and Krishnan, as a consequence of that, is sitting on a profit of 80,000 rupees. Number one, would you suggest him to book his profits? And two, what is your future outlook on the company?
Since you're making such a large profit, and if you look at the valuation of the company, while it has got, recently this big order of 60,000 crores for the helicopter and helicopters, I think it is going to take a while before those planes are actually delivered and before the revenue gets booked in. So considering that, the valuations are trying to factor all this new orders into the profitability today and then give a valuation based on that, you are sitting at an expensive valuation at this point in time. So it's always better to book profits, and you can always enter when the valuations become reasonable.
All right, thanks for that view. Now we'll quickly go across to a caller joining us from Chennai. Hi Harish, good evening.
Yeah, hi, good evening.
Yes, how can we help you?
So actually I'm holding shares of IREDA.
Okay.
So I wanted to know, how would it be going forward? Its results are coming next week.
Right. So are you looking for a long-term view or a short-term view?
Short term, probably 3 to 6 months.
Okay, 3 to 6 months outlook on it. So quickly, I'll go across to you, Gaurav. Currently, the stock is trading at 152. Harish bought it at 160. So IRDA stock, are you seeing any bullish momentum or any cooling off?
As of now, there are no such signs of any kind of a meaningful reversal coming in. No bottom formation, no accumulation, nothing is visible. So, but considering a 3 to 6 month horizon, I would suggest it is better to hold on to this stock, currently trading at 152. It made a low at 132. So 130 should be a stop loss that the viewer should maintain and just hold on to the position. But he should also look at booking its stocks, booking the position somewhat around 175 to 180 range.
Okay, and now very quickly, K. Ghosh is calling us from Bengaluru. Hi K. Ghosh, good evening. Thank you so much for calling. What's your question? Hello? Hello? Okay, there's some audio issue. So K. Ghosh currently holds 330 shares of L&T at 1,700 a piece, and he's seeking a long-term view. Firstly, he has made a huge profit, close to 4.5 lakh rupees. Congratulations, Ghosh. And again, Mr. Lansdott, I would come to you on this one. Would you recommend K. Ghosh to book his profits on L&T as well? And how do you see L&T playing the infra push in our country?
So I would, recommend that he continue to hold L&T because, the stock is actually trading at a reasonable valuation. And I think given that they are focused more on the domestic infrastructure space and maybe on the Middle East is the other area where they do receive large orders, you could see more traction coming up both in domestic as well as in the Middle East area. And maybe as things progress, then their order book could grow significantly. So L&T, I think, is valued attractively. One can really look at maybe buying it or adding to the portfolio, and I would recommend he hold on to his position.
Okay, so hold on to his positions and continue being positive on the stock. And thank you so much with that. Mr. Lancelot and Mr. Gaurav, thank you for joining us this evening and answering all the queries of our viewers with such patience. And viewers, you stay tuned to NDTV Profit and do not forget to send in your queries and call us live as we take them on the show just to give you the best investment advice. But there's a lot more lined up for you on the other side, so stay tuned.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You know, you're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
We want to be the de facto platform for startups to accept payments. Out of 120 unicorns that India has, Razorpay powers almost 105 of them.
Then there is delivery. This stock has also been buzzing in trade. Dealers are indicating that there's a potential corporate development announcement, some acquisition announcement that the company could do when it comes to e-commerce express delivery space. So keep